Ladies and gentlemen, I've never been more serious than right now when I say this. The banks only have 2 days left, and if they fail this test that is coming, we could see a full-blown financial crisis and see some banks or hedge funds collapse. Credit cards and accounts could freeze as debt markets go haywire, because we've just got some new shocking news that's showing that the financial system is breaking and that the global debt market is breaking as well. So everyone, if you haven't already, this is not financial advice, but what I would be doing right now, running to the bank, getting some cash out, just in case we do have a Black Monday and financial crisis next week. So everyone, why am I so worried about this? What new warnings did we get just today? Well, that's exactly what I'm going to go over in today's video. So let's not waste any time, ladies and gentlemen. Let's get straight into the news, the facts, and the data. Okay, first things first, I just want to show you that banks are preparing for massive losses like I've been warning about. And we just got some new latest headlines. US banks to set aside $4 billion for potential losses from bad loans. So everyone, I'm not just saying this to scare you, this is literally happening as we speak. People have been able to take on mountains and mountains of debt during 2020 and 2021 when the banks were just giving away debt. They said, look, don't even worry about paying it back. Don't even worry about paying your mortgage, your rent, your credit cards, your student loans. Just take all this free money and you know what? We'll print trillions and trillions of dollars and there'll be no consequences. Well, people, the party's over. And guess what? The managers come to give them the bill. And this is the biggest bill they've ever had to pay in history. And I don't think they were prepared for this bill, and I don't think they got enough money set aside for it. Wall Street will signal its concerns about the US economy in Q3 earnings this week. So this is going to be huge this week, everyone. And next week, we're going to get the earnings reports from the banks to see how much they've lost or how much they're putting aside to prepare for these losses. Now, with loan demand still growing, banks are preparing for the possibility that rising interest rates will slow the economy and result in high credit losses, a concern that has already dented bank stock prices this year. So that's exactly right, everyone. Everyone said, look, debt was so cheap. You're a fool if you don't take on debt. They were saying, look, just don't worry because inflation will erode away the debt. And yes, maybe that makes sense when interest rates are at 2 or 3%. You can borrow money, and if inflation's 3, 4, what we have now, 8, 9% official CPI inflation, when we all know the numbers are actually higher, maybe it made sense. But guess what? Credit card interest payments are skyrocketing. Some I've seen all the way up to 25 or 30%. This is something you'd think you'd expect from some kind of shark loan. And mortgage rates are now over 7%. Auto loan interest payments are skyrocketing. And with the cost of everything else rising like food, petrol, gasoline, utilities, it's just becoming too much. And it's just inevitable there's going to be huge losses coming during this depression. To this, the 6 largest US banks by assets, JP Morgan Chase, Bank of America, Citigroup, Goldman Sachs, Wells Fargo, and Morgan Stanley will collectively provision about $4.5 billion in loan loss reserves in the third quarter earnings, according to an analyst's estimates compiled by Bloomberg. And listen to this, it would be the third consecutive quarter of loan loss provisions increased by the banks. So this is not the first quarter they're doing this, everyone. Every single quarter, every single 3 months, they're putting away more and more money for these loans going bad. But you may think, okay, well, yes, they are putting money away for some loans to go bad. Maybe it won't be that too much to worry about. Well, people, that's just the first piece of the puzzle. There's much, much more and much, much worse things going on at the exact same time, which is going to create a perfect storm. Look at this. Americans continue to pay for inflation with credit cards. The analysts on Wall Street, they're saying, look how good the consumer is. They're going out there, they're spending like crazy. They're taking more debt on with their credit cards. They're saying this is a great thing. Well, no, people, this is not a great thing. The only reason they're doing this is because they can't keep up with the rising bills, food, groceries, etc. And eventually what happens with credit cards is you max out. And once they hit the limit, that's when this depression is really going to kick in. And when people get hungry, there's going to be some chaotic things happen. In August, revolving credit increased by a staggering 18.1% as total consumer debt surged to a record 4.68 trillion according to the latest consumer data from the Federal Reserve. That is mind-blowing, people. Consumer debt rose 18.1% in August, and we've just hit a new record of 4.68 trillion. That combined with people's savings rate at all-time lows, I don't think we have to be economists to figure out what's going to come next. There's going to be mass defaults and delinquencies and big losses for the banks. And it is clear that Americans are laboring under the growing debt load along with rising prices. According to a recent report by LendingTree, 32% of Americans have paid a bill late in the past 6 months, and 61% said it was because they didn't have the money on hand to cover the cost. So this is shocking, people. 32% of Americans had a late bill payment in the past 6 months. And 61% of Americans said it was because they had no money on hand whatsoever. No money for an emergency. I don't care what the analysts say by saying, look, we're not in a recession. There's no recession coming. And if we are in one, it's very slight. No, people, we are in a full-blown recession. Like I keep warning about, we're going to be entering a depression. Because it's becoming a luxury just to have the essential human needs. It's becoming a luxury to have a roof over your head, to be able to afford to heat your home, be able to afford to fill your car up with gas, and to have a pantry and fridge full of food. This is a full-on attack on the middle class. And by 2030, there won't be a middle class anymore. You will have nothing. The elites will have everything. They will be happy and we will be miserable. But again, you may be thinking, okay, well still, this doesn't seem like the banking system is going to collapse in a few days. This is not the worst of it, people. It gets worse. This is the main event of the evening, everybody. Bailey's warning sends shivers through the fragile global bond markets. Bank of England Bailey has a message for funds. You've got 3 days to wind up positions. In all my years reporting on the financial markets, I've never seen something more worrying than this. The markets have been exposed. These banks have been exposed. These hedge funds have been exposed. They have been gambling away with your retirement. They've been taking your savings in your bank account and they've been speculating. They've been turning them into toxic derivatives. And now it's all about to blow up in their face. Now, why this is going to be so much worse than 2008 is because this time we have record inflation. So the central banks are telling them, look, we can't keep bailing you out like we did in 2008. You've got 3 days left to get your house in order before we start selling these assets and before we stop buying, and we're going to see a huge liquidity crisis if this doesn't go smoothly. A lot of my viewers are in the US and Australia, and you may think, well, this won't affect me. People, like we saw in the markets these past 2 weeks, they've been very unstable. We've seen lots of selling. We've seen yields rise, interest rates rise on government's debt. This is uneasy waters right now. And again, it's not just these pension funds and these banks in the UK that are facing big trouble. Remember, the global financial system is all interconnected, and this is now flowing into the US, and the US is the biggest economy in the world. And like 2008, when the US goes down, when the US sneezes, the rest of the world catches a cold. And there's been some more very worrying news come out about the bond market in the US, specifically the corporate debt bond market. Oh boy, look at this, everyone. US corporate bond ETFs plunge in global debt market rout. So what a lot of people focus on is the stock market, the housing market, cryptocurrency. They don't understand how the biggest market in the world works: the bond market and the debt markets and the money markets. The bond market is what sets interest rates and what value risk assets should be. What we're seeing right now around the world, UK, US, Australia, etc., bond prices are crashing. Now, a lot of funds have these bonds on their balance sheets. They've used leverage. They've taken on debt to borrow against to try to get bigger returns for these bonds because yields were so low for the past 20 years. Well, now the bond price is crashing. They're getting margin called. Government bonds, but what's more worrying is corporate bonds, where corporations raise debt. They sell this off and they'll say, hey, we'll pay you some interest on this debt. But because now people can get a 4% yield by buying a government bond compared to a corporate bond, they're saying, I don't want to take the risk by buying this corporate bond because investors think these companies are going to be in big trouble, and these banks are going to be in big trouble when we enter a full-on depression and financial crisis. And there's nobody buying whatsoever, and this is why central banks are in a panic, because again, normally they're there to save the day, but they can't save the day because what they're doing right now, which has never been done in history. I just want to specify how huge this moment we are in right now. This has never been done in history, quantitative tightening, where central banks have brought tens of trillions of dollars worth of assets and had to try to sell them in the market. The only reason we recovered from 2008 was from the bailouts from the central bank. The only reason why the markets have been smooth was because the central banks were the buyer of last resort. But they can no longer do that, everyone. And if they do keep buying assets, we're going to see hyperinflation. There's no get out of jail free card here, everyone. Central banks are backed into a corner. Banks are backed into a corner, and we're not going to get out of this without severe pain. Even they are admitting this. Because look at this, everyone. Fed Evans says fighting inflation is a top priority, even if that means job losses. Because a lot of people thought, well, when people start losing jobs, when the economy starts to weaken, the Federal Reserve will come there to say the day they'll pivot. But again, the Federal Reserve is keep on reiterating, no, we're not going to pivot. We're not going to pivot until the job's done and inflation goes back down to 2%. And what many people think is that inflation will go back down to 2% next year. People, it does not work like that. Do you know what happened the last time we experienced this crazy inflation in the 1980s? Guess how long it took for the Federal Reserve to get inflation down to 4%, double the Federal Reserve target. That's right, it took 5 years, and it took another 10 years to get inflation down to 2%. So if you think this is just going to be Federal Reserve lifts interest rates to 4 or 5%, and then the next year inflation falls to 2%, you are going to be mistaken. Interest rates are going to go higher, and they're going to be higher for longer, and this is going to be a slow grind down. Even if we don't have a flash crash or a Black Monday, we could see, like what we've been seeing, just 1-2% drops every day until the markets are down 45%. So everyone, again, it is time to prepare now before it is too late. Go and get some cash out of the banks. If you don't have any cash on hand, prepare by buying the essentials you need every day, like food, water, and just figure out what other essentials you need every day, day to day, to get by in case the payment systems go down, in case your credit card gets frozen or your bank account gets frozen. If just in case, I hope it doesn't happen. Again, I'm not saying it's definitely going to happen, but we are at risk of some kind of financial crisis next week. Now, everyone, what do you think about all of this? Let me know in the comments below. Again, for all my loyal viewers and subscribers still watching, you're awesome. Thanks for watching. I'll see you all in the next video.